You're in the Business Insurance Zone with me, Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. This week on The Biz, our monthly update series for June 2013. On today's show, the Life Insurance Underwriting Update with impaired risk expert Jessica Lopez.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone, and of course I'm your host Steve Savant, and we're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today, Her Excellency, all that is impaired risk, Jessica Lopez. Hey, Jessie.
Hey, great to be here, Steve. What an intro.
It was an intro. You are the princess of premium. And I have to say, if you didn't catch yesterday's show, we went off the rails a little bit. We did a whole consumer show of questions we're getting. And I think that was a hot show.
Oh yeah, very informative.
Go back and check it out. And this is the way you should be talking to your clients too. I try to make it like a consumer show. I kind of dipped into the producer side a little bit. But we're talking today about impaired risks. All that is substandard, hard to place cases. We may have to do a show sometime that's exclusively standard and above. Try to rank everything between super preferred, preferred plus, preferred, non-smoker, standard plus, and standard. I think there's 5 now.
Easy for you to say.
Well, hey, think about that. When I came into the business, there was only, hey, you're a smoker,
Standard.
you're a non-smoker.
Yep.
You know, and now we have iterations. I mean, they're parsing your urine and blood exam to the nth degree.
It's a little crazy.
It is crazy.
Underwriting. And so it's really hard to know out there where you're going to be able to, place your client. A lot of times it just takes doing a little bit more homework, digging into the details, and, we can help you do that and help determine where it's going to be the best fit.
And they call this a science. Well, whatever. Okay, let's talk about this first case.
Yeah, this first case that we have here is with Protective Life, and we're going to give you some underwriting examples just to keep in mind when you're coming across your next client. Maybe they're kind of in the same situation. So in this particular situation, this yielded $132,000 in target premium.
I love that.
The situation is a 55-year-old male attempting to replace $9 million of whole life insurance coverage with GUL coverage to age 100. The client required a standard rating for the replacement to make sense. However, there's always an however, the medical history was getting in the way. So the client's medical history had noted medical records created some ambiguity, which included elevated PSA, depression, and Crohn's disease. So we did take this to the underwriter at Protective, and basically they went through, they found that the depression history was okay, under control. Crohn's history basically came back, a good colonoscopy over the last 10 years, everything is fine and under control. So they were able to yield a standard non-smoker offer, which would provided the $132,000 target premium.
I want to give it encouragement, because depression is not a deal killer anymore. It has to be managed, there's no doubt about it, and certain drugs are kickouts, no doubt about it. But I want to encourage you, this is a huge premium, and this thing went standard, a little shock to me, and $132,000. Wow.
132.
Yeah.
Now, next case we have is with Metlife. This is a Promise Whole Life 120 product, yielded $242,390 in target premium.
By the way, they just rolled out their whole new whole life platform, all brand new. A couple of these areas, they are going to be major players in. So just a little heads up on that. Sorry to interrupt.
That's fantastic. Now, in this particular situation, we had a client, age 49, with a life insurance need of $14 million. The client was a true believer in cash value and so had opted into what their agent had suggested, which was the Metlife policy. The client was pleased with the product performance and was very interested in basically continuing on with the coverage with Metlife. So the guaranteed cash value exceeds the premium paid by policy year 15. The death benefit is projected to increase over time, reaching over $25 million by life expectancy. That's insane.
It is insane. And by the way, my favorite part of this whole thing, $242,000 of target annual premium. I love stuff like this.
Next case on our list is with Lincoln Benefit. This had to do with medical underwriting. This case is $22,000 in target premium, still a great commission. This is regarding a 53-year-old female and a 60-year-old male seeking to replace $2.2 million for estate planning survivorship purposes. So they decided that between talking to their agent and going through underwriting that this would be the best option. She was a standard risk due to elevated sugar levels. And the husband was reviewed for non-core carrier and postponed due to CBC a few years back. So that was really what the challenge was in this scenario. But we were able to get through this underwriting through Lincoln Benefit. And because we basically were able to go through the records and see that the rest of the tests had been normal. He was able to get that standard rate class.
I want to encourage you, just remember what we're talking about here. We just named 3 different carriers. That means I can't go to one carrier for an impairment. I have to look at the disease, the impairment, whatever the issues are, and we have to think out, now are we going to bid this out? Or are we going to say, no, we already know who the players are? Because it's so different from carrier to carrier, and that's what we have to look at. And once we're done with the actual call, what kind of offer am I going to get? I have to look at the product. Is the product going to work with the offer?
Exactly.
So I just want you to keep in mind, this is what we're looking at.
Absolutely, and every person's different. Everybody has a different need, has a different medical history, financial situation, and so, like Steve said, everybody's going to play a little bit differently in each scenario. Now, we also have a case here from John Hancock. This was on their Protection UL. Target premium on this is $104,000.
I love that.
This is regarding an 81-year-old female who purchased $1 million annuity contracts in 2011. One qualified and the other non-qualified.
Yeah, by the way, I want to interrupt here. This case, this lady did not need her RMDs. And I just want to give you a heads up. Everybody over 70 years old, when we're approaching clients for where are we going to get the premium, I cannot tell you how many times that 20, maybe 30% of the clients that we interview do not need their RMDs or required minimum distributions. This is an excellent way to get your premium.
Oh, it is, absolutely. Now, being over the age of 70 and a half, the client is forced to take RMDs out amount of $61,000. And just like Steve had mentioned, she didn't need them, so this was a great opportunity for her to take advantage of extra coverage.
I want to really encourage you, remember, the name of the game here is, hey, where's the premium going to come from? Where are we going to find it? RMDs for geriatric clients are an excellent place to go to because we find so many of these good seniors really don't need the income, and that's where I'm going to get the premium. Hey, when we come back, we'll continue our monthly life underwriting update for 2013 for June with Jessica Lopez. And don't forget to enroll in IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Did you know the average 401k runs out of money just 7 to 8 years into retirement? Time Magazine, the Wall Street Journal, and many other publications have warned of the difficulty of saving with a 401k. But what if there was a way to create tax-free lifetime retirement income with no stock market risk? Good news, there is.
Living in fear of the next market dive is not the way I want to live my life.
Why would I go out there and take on risk when I don't need to?
I have a lot less stress knowing I can't lose any more of my retirement savings in the stock market.
Call now to receive your free, no-obligation analysis of what this retirement vehicle could do for you, a comparison to your current retirement plan, and a free video that explains this exciting opportunity. Start planning a retirement you can enjoy instead of worrying about future tax increases and stock market losses. Creating income that will last your entire life is the most important thing you'll ever do. Take control of your future. Call now for your free analysis, comparison, and video.
Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Jessica Lopez. And remember, you can order today's materials. Any of these cases I'd like to see, we just go out to our site at www.thebiz.tv. Almost gave you my email address. I'll give you that later. And while you're out there at thebiz.tv, click on the Backroom Technician icon for your 30-day free trial offer for access to the best needs analysis and client materials for almost every financial situation. And heads up, just before moving forward with anything you ever hear in our show, always consult your tax advisor and legal counsel, as well as your broker-dealer compliance officer if you're FINRA licensed. We're in the middle of our life insurance underwriting update for June 2013 with Jesse and Jessica. When I'm looking at this, first of all, and I'm glad we threw in that one case, 22,000, because everybody thinks, hey, the only things these guys deal is the high-end six-figure. Now, I love six figures, but a lot of the times people spend their health when they're accumulating their wealth. And so when we're talking about people who have money and they really need to protect against taxes or whatever the issues are, we're going to be into some high premium here. And this is why I don't want to discourage. And if I have a consumer watching our show saying, Steve, I didn't realize these kind of conditions were okay, that you can actually work with this and still make it happen. So I want to do an encouragement. I wouldn't go out elephant hunting on six-figure target premium. I'd rather do that steady Eddie 22 grand every, a year target. That's great. But when we're looking at this, I want to encourage you. There is a huge market in the geriatric demographic where you can make significant career learning a little bit about diseases and what carriers. We'll take care of that.
Right.
But let's talk about another one. This one's by American General. And remember, again, I think I haven't looked through the whole script, but I'm pretty sure that there's not one duplication in the carriers we're showing this show.
No, they're all different.
So they're all different. That
different.
tells me I couldn't have went to the other one to get the same underwriting offer.
Right. And one common call question that we get basically is, okay, who's your best carrier? That's a pretty broad question. I mean, we have a lot of very good carriers, and they're good for various reasons. And it's just a matter of having them in your portfolio so that you can pick and choose who you need to go with. So the next one here we have is with American General. And this is regarding a guaranteed cash value proposal that yielded $171,000 in target premium.
Love it.
Now, in this situation, we're looking at a female age 68 who was in need of $7.5 million in life insurance. In addition to the death benefit protection, the client and her advisor were focused on the accumulation of the cash with the policy. American General had offered preferred on the client to have any shot in the case. Prudential at the time was a leader of the clubhouse with an ongoing annual premium with 3% cheaper than American General, even with underwriting parity.
Yeah.
So basically what we were able to do is provide a solution with the American General Secure Lifetime GUL. We basically took the information from the underwriter, went back, looked at the information, and we found that we were able to go ahead and participate with the rate class that they needed.
Yeah, I love that. This is AG, and I'm looking at, I love that he goes, it was the best offer in the clubhouse. I was like, oh, were you sitting in the glove?
Yeah.
We're sitting on the golf cart making this case go. And remember, a lot of people do what we call, turf and research on the golf course when they're talking to big clients. So I mean, it's not a line, but I'm just thinking, hey, at the clubhouse, like the Peru lost and AG won. Okay, fine.
Exactly, and you have to keep in mind too, in a lot of the shopping that we do, and we're looking for the best option, you're going to have, various table ratings. Some are going to be different pricing than others. Some are, and American General is one of them, where they actually base off as Standard Plus versus Standard Non-Smoker. Banner is another. So keep that in mind. Just because you're seeing maybe a table 2 or a table 4 doesn't necessarily mean the rates are going to be better than the other.
True.
The next carrier that we have is with AXA Equitable. This is for the Athena IUL. The target premium on this was $23,000. In this scenario, we're looking at a client, male age 55, with a life insurance need of $900,000. Client was looking in good health, and basically we just needed something that would produce the most cash value in this situation, and AXA was the winner.
Well, I like this because, again, we're not only using our 6th or 7th carrier already without duplicating carriers, but everybody has their niche market on product. This case, they used an IUL instead of a traditional guaranteed universal life.
Right.
So it's not only just the underwriting offer, it's not only what Jessica said about, hey, some of these, like Banner, they give actually Preferred Plus. That's going to maybe push your table B automatic to standard, some of the ways they do things. But now we're looking at another case where the product comes in line, and that's why I need to look at product, I need to look at the carrier, I need to look who's giving it away between Standard and Standard Plus, and who's doing, and we're going to get into this, of course, in the fall more, table shaving. Because there's carriers out there that are playing from table 3 on down Standard Auto all day long. And then it gets more intense in fourth quarter.
Absolutely. So the final carrier that we have is Aviva. In this situation, we're looking at a 42-year-old female and a 46-year-old male. They were seeking $10 million in coverage through a survivorship plan for estate planning. Both insureds are medically based class risks, but the husband had actually is a drag racer. So this is the first one that we have for avocation, which I enjoy seeing these because you just never know. I mean, they're healthy, they're fine, but they just love doing some wild and crazy things. But we're able to basically get the underwriter to take this to a preferred offer, which yielded $50,000 in target premium.
Now, listen, I just want to clarify this case because it's a little different than we normally. This is not one of our typical cases. We're not talking about a disease.
Right.
We're talking about a recreational vocation. Listen to the potpourri that you have to go down to make sure we can do this. Is his drag racer, is it jet powered motor? Is it top? It's not top fuel. So I guess there's a difference in fuel consumption here. It's not a funny car. It's not a pro dragster. And this is what I'm saying. It was more recreational. It's not professional. And they had to bust out and micromanage these specific questions to drag racing. I mean, when you look at this and think about this, Aviva, we had to talk them into, I don't want to say we talked about it, let's just say they learned to be flexible when we presented them with some neat facts. Well, that's what we have on our show today. Remember, you can follow me on Twitter, Facebook, LinkedIn, and email me at steve@thebiz.tv. Well, that's the Buzz on the Biz for today. You've been in the zone, the business insurance zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.